Welcome back, everybody. Thanks for joining. Obviously, we have a ton of news to go over today, as well as some just general thoughts on the markets, what I'm doing with my portfolio. We have elections coming up soon. We have a president that just tested positive for coronavirus. There's a lot of crazy things going on right now, so I kind of want to wrap this all up in this one video and share my thoughts on it. So first of all, the biggest news of the week by far was that late Thursday night, it was actually technically Friday morning, President Trump tested positive for coronavirus. This has turned out to be not the type of coronavirus where it's asymptomatic, meaning he's having some mild symptoms, and they actually moved the president to Walter Reed Hospital just to do advanced monitoring of him. So this is a developing situation. There's lots of breaking news. There's news sources that are covering this by the minute, by the hour, trying to get every little detail on this. I'm going to kind of back up and just share some thoughts on this overall. We also have different news on the economy. The New York Times reports that jobs gains are waning, a blow to the economic recovery. So I want to look at overall 2020, what I think we're going to see going into 2021, and why I'm investing, why I'm pouring so much money into stocks, despite headlines like this. Despite headlines you're going to see like this, with the president getting coronavirus, with the job gains waning, this is all negative news, and I'm investing anyways. So I'm going to be explaining why I'm doing that. And then, of course, the drama continues with Nikola, this company that just exercises poor judgment, step after step after step, poor decision-making, poor judgment. They did it again. They basically decided to target every YouTuber, all the independent YouTubers that used any footage of their Nikola 1 video. You know, that video of the big Nikola truck rolling down a hill that they filmed in a way that made it look like it was propelling itself through having an engine, like you would assume. No, that was the video that they didn't like anybody actually sharing this. So they copyright striked all the YouTubers that were critical of them and had any of this footage, including yours truly. I had one of my videos copyright striked. Obviously, it was done completely illegally because we used this video footage legally. It was legal under fair use. Now, Nikola, after receiving a lot of backlash, a lot of people saying, you know, you can't do this. You can't go and try to bully us into being silent about your company. They decided to reverse everything. So they removed every copyright strike. So the episodes that were previously taken off of YouTube, these two, episode 113 and 114, those two episodes were gone, and now they're back. So this whole story has been dramatic, and I would say very stupid. This is just one more example in the mountain of evidence, the long list of examples of dumb decisions that Nikola has made. So I have more thoughts to share about this, but I'm going to leave it to later on in this episode. There's much bigger news to get into. So we'll be talking about Nikola, but just a little bit later on. And then, of course, we have my portfolio. I'm going to be giving a full update on it, what companies I'm buying, and what my plans are going forward. Like I said, we have a crazy year behind us, and I think we have a crazy year ahead of us. We have a president that's infected with this virus right now. We have job numbers that are dismal. We have a lot of different news coming out, and it's a crazy time to be invested. So I'm going to be sharing some thoughts overall on what I plan to do with my portfolio. And of course, I'm going to be answering a lot of questions. So we had a lot of interesting questions over the past week, and I'll be going over those as well at the end of this episode. So we have a lot of exciting stuff to get to. Now, before jumping into all of that, I have to mention now is the time. It's the beginning of the month, which means you can join the Patreon for free for the entire month. You get the whole month for free, every single benefit. You get access to the dividend tracking website. You get access to the community Discord. You get access to, I think, 5 exclusive episodes. So, you know, live a little, give it a try. It's $6 a month. You won't be billed this month if you join right now. And I'm convinced that if you try it out, I think you'll like it enough that you'll continue to stay. That's why I give it out for free and I have the trials, is because about 80% of the people that join continue to stay even past the free trial. So try that out. It also helps support the channel. So when companies like Nikola come in and they're upset at things I do and they strike different videos, it helps pay for this whole operation. So I appreciate each and everybody that helps support it. Okay, let's jump into some news. By far, the biggest news of the week was that President Trump and many people close around him have tested positive for the coronavirus. So this was news that broke, I believe, Thursday evening, maybe technically Friday morning, that President Trump had tested positive for coronavirus. Now, he was at the White House for, I believe, a day, and then they have since moved him to the Walter Reed Military Hospital, where they can do advanced monitoring. Here's one of the doctors explaining, as of what we know right now, President Trump's condition.
As reported yesterday, consultation with this group, I recommended we bring the president up to Walter Reed as a precautionary measure to provide state-of-the-art monitoring and any care that he may need. Just 72 hours into the diagnosis now, the first week of COVID, and in particular days 7 to 10, are the most critical in determining the likely course of this illness. At this time, the team and I are extremely happy with the progress the President has made. Thursday, he had a mild cough and some nasal congestion and fatigue, all of which are now resolving and improving.
This is basically what the doctors have told us so far, that he only has some mild symptoms, a cough, some fatigue, that he has some nasal congestion. They haven't mentioned a fever. They haven't mentioned that he's being put on oxygen or anything like that, just these mild symptoms. Now, that was the update from the doctors as of Saturday morning. It was pretty optimistic. Here's a video that President Trump released as of Saturday evening.
I just want to be so thankful for all of the support I've seen, whether it's on television or reading about it. I most of all appreciate what's been said by the American people, by almost a bipartisan consensus of American people. It's a beautiful thing to see, and I very much appreciate it, and I won't forget it. I promise you that. I also want to thank the leaders of the world for their condolences, and they know what we're going through. They know what, as your leader, what I have to go through. But I had no choice because I just didn't want to stay in the White House. I was given that alternative. Stay in the White House, lock yourself in, don't ever leave, don't even go to the Oval Office. Just stay upstairs and enjoy it. Don't see people, don't talk to people, and just be done with it. And I can't do that. I had to be out front. And
so this is the last update we have. This is directly from President Trump's Twitter, him in person saying that he feels okay, but he is concerned about the upcoming critical days that he's being told about from the doctors. That is the 7 to 10 day mark, falling sometime next weekend, where we get to see if the virus remains with mild symptoms and it gets a little bit better, or if it takes a turn for the worse. So hopefully things get better and President Trump is able to recover quickly. I did like seeing some of the remarks from different politicians that I think were bipartisan. Like President Trump said, this is kind of a bipartisan issue. When Nancy Pelosi heard this news, she said, quote, "We all received the news with great sadness. And I always pray for the president and his family that they're safe." And I think she says that with sincerity. President Obama said, quote, "We also want to extend our best wishes to the President of the United States, the First Lady. Michelle and I are hopeful that they and others are getting the care that they need, that they are going to be on the path to a speedy recovery." And again, I think he said that with complete sincerity. So I liked seeing that with our political leaders, that this is an issue that I think is bipartisan. Now, on top of the bad news that President Trump has coronavirus, we also have bad news about the economy. Job gains are waning. The recovery is happening, but if we look at this graph here, it's happening at a slower pace than we would like. Every single month, we're gaining less jobs than the previous month. So the rate that we're recovering is pretty slow, and it's decreasing over time. And we're not even close to where we were 4 years ago. So in 2016, let alone where we were February. In February, we had 10.7 million more jobs than we do right now. The New York Times reports that the unemployment rate fell to 7.9%, down from a record high of only 15% in April. But even that good news carried a caveat. Nearly 700,000 people left the labor force, meaning they no longer are counted as unemployed. So we don't like to see that when people just completely stop looking for jobs. That does technically lower the unemployment rate, but it's not a good thing. It just says that they aren't looking for work anymore. And they consider a lot of these jobs being lost permanent rather than furloughs. So this is the situation we're in. We have an economy that's struggling to recover. We have over 10 million people that are still out of work, and some of them might be permanent. They might have just exited the workforce. They're not looking for jobs anymore. We have a president that has the coronavirus, which is specifically dangerous in his age group and category. And we're in the middle of elections, which in and of itself carry a lot of risk and a lot of uncertainty. So with this information, with all this chaos going on, what is my plan with my portfolio? What do I plan on doing in the future? What I plan on doing is continuing to buy stocks like crazy. As fast as I can, buying as many stocks as I can, putting as much discretionary money that I have available into the stock market. That's basically my plan. And none of this information changes that. Not the economy, not the elections, not President Trump becoming infected. None of this news is going to change that. It might cause temporary dips in the market, temporary chaos, things that might not be accounted for. But overall, the way to become wealthy is constantly accumulating assets. That is the way to become wealthy, is gaining equity in these different companies. These companies are going to continue making money year over year, whether or not Biden wins or Trump wins. It doesn't really matter. They're going to continue their business as usual. Most of these companies have been in business through multiple presidents, both Republican and Democrat. So regardless of whether your political opinion is, I think you should continue to invest. I think that you should continue to put money into the stock market and buy highly productive companies. That's what I'm doing with my money, is I'm buying these stocks as quickly as I can. Other people have shared this same sentiment. Chamath Palihapitiya says, elections won't matter. Stocks are going higher in the next 4 years, and you need to be long. He says, irrespective of whether the Democrats or Republicans are in office, if you're trying to generate returns, you need to be long, and you will probably get rewarded. I think the markets are going higher because I think the presidency and the impact of the presidency is being divorced from the economic future prosperity of America. I agree with Chamath completely there. Everybody thinks that their candidate is going to help out the markets and the other candidate is going to destroy the markets. That's basically what everybody thinks. They thought that with President Obama. They thought that with President Bush. Every time they think that, the president gets into office and it really doesn't seem to have much of an effect. When President Obama took office, the stock market did fine. We had a recession and it recovered from it. When President Trump took office, again, the stock market did fine. It continued to grow despite a lot of people saying that he was going to destroy the stock market. So all these people warning about who's going to become president and the effects it will have on the stock market, most of the time it hasn't been good advice to heed their warnings about a certain person gaining presidency. Chamath also points out the effects of the Fed. He says, you have coupled monetary and fiscal policy. You have a Treasury and a Federal Reserve that are acting in lockstep and they are printing trillions of dollars, and they will have more of an impact over what the next 4 years looks like. You have rates at zero. You have absolutely no growth, so you are going to fuel asset price inflation. This is also true. The Fed said that they're not even close to raising rates. Jerome Powell said that they're not even thinking about raising rates. It's not even a discussion they're having right now. They might visit that issue in like 2023. So we have at least a few years without the Fed raising rates, which means that inflation might happen. It might go above 2%, and the Fed is likely to let it run above 2% for at least a couple years. If that happens, the thing that you want to own, if there's inflation, is you want to own assets. Assets like companies and real estate are a decent hedge against inflation. If you own bonds or you have your money just in a bank account, inflation is definitely going to eat away at your returns. And then with the Fed that has been very dovish, very complimentary of the markets, we also have President Trump urging Congress to get another coronavirus stimulus passed, saying, quote, get it done in all caps. So this is something that's likely going to pass as well, as we'll get another stimulus, which again, that seems to help out the markets. All the people that really need that money, they go out and spend it, and all the people that get that money that don't really need it, they put it into their Robinhood account, they put it into the market. So even though we have a lot of chaos, we have a lot of things going on that might make you concerned about investing right now, by all the data available, there's no better place to have your money. So that's what I'm doing with my portfolio. Despite all the craziness and all the news, I continue to buy stocks as aggressively as I can. So in real estate that's been hit really hard, we've been recovering with that. So one of the recent companies I've been purchasing is Store Capital. I'm up about $1,600 on that company, so that's been one that's been doing well. We also have been making money with Realty Income Corp. That one's been holding up really well. In tech, I've purchased a lot of Apple. I'm still up $4,600 in that one. It's traded down recently. I think Apple had some momentum buyers get in it, and it just pushed the stock price up like crazy, and now the momentum has left. So Apple's kind of back to trading where it probably should be. I think the upcoming Apple event's going to be pretty big with this stock when they announce all their new devices. So I own a lot of Apple. That's one I'm happy to own. I've also increased my stake in Microsoft. I bought a little bit more of that. I think their gaming segment is going to be doing really well. And I've purchased more Comcast. I've purchased more Target. With Comcast, there's a lot of things I like about this company. I know not many people like the internet company Comcast, but Comcast is the parent company of NBC. They own Peacock. They own CNBC. I see CNBC growing because I think the stock market and investing news has become increasingly more popular. So I think they'll have better ratings. I think they'll be able to sell more ads. I also think Peacock is going to do really well because it has a free tier. It's kind of the freemium model where it can be ad supported. And NBC is typically good at coming up with really good TV shows. So I think they'll make originals on their service that will be pretty decent. So I actually like owning Comcast, despite a lot of people not liking the internet portion of the business, but I see a lot of the growth outside of that. With Target, I think this is a company that's going to continue to do really well, and I think it's trading at a better price than most other retailers. So that's basically it right now. I continue to build up my stake in these different companies. Now, those are all my recent buys. If you want to see my entire portfolio, there's a link in the description. If you click on that, you can see every single holding in my portfolio. Okay, now moving on, I have to address this whole drama with Nikola. Nikola, if you aren't familiar with them, they are a dumb and dishonest company. That's what Nikola is. It's a company that routinely, repetitively makes dumb decisions and poor judgment. It's a company that I believe is highly deceptive and dishonest. One of the decisions they made was to actually produce a full video with aerial footage, with lots of camera angles of their Nikola One truck driving on a road. But in reality, it was rolling down a hill. They left out that little caveat that it was rolling down a hill. They filmed it in a way that I believe was highly deceptive, and it would lead any investor to believe that the truck was driving itself. They titled the video Nikola One in Motion. Now, once that was revealed to be completely bogus, that the whole thing was manufactured to look a way in which it wasn't, a lot of people reported on this news. I was one of them. On a couple episodes, I showed, for a brief amount of time, the video Nikola One in Motion with commentary and context and insight to it. It's completely legal to do that. It's called fair use law. People can give commentary on other people's content. Now, Nikola doesn't like that these things are being exposed. They're not liking that other people are being critical of them. So what they did was they went on YouTube, they searched for any Nikola video of any YouTuber that was critical of them, and if they used any footage of that Nikola One video, they copyright striked it. They did that with one of my episodes. That's why I had taken these episodes down for a couple days. Now, this obviously had the Streisand effect. It blew up on Nikola. Every single YouTuber in the whole financial realm started making videos about this, and this subject made its way all the way to the front page of the Financial Times, which again, if you're not familiar, the Financial Times is one of the biggest financial journals in the world. This is Nikola's decisions. They decide to go after small independent YouTubers for something that's so petty as using their content for a brief amount of time. And what that results in is them being featured as being petty and trying to remove criticism for them on the Financial Times, a journal that's read by some of the highest profile people in the world. So I do have just a couple questions for Nikola. I know that you guys watch my videos because my copyright strike was manual. It wasn't part of YouTube's automated system. It was a manual strike, which means one of your employees went onto my videos, watched it until they saw the footage, and then they manually issued a strike. So I know that you're watching my videos, and I have a couple of questions for you, if you could answer these. One of them is the Nikola One in Motion video is a promotional video. It's one that you filmed, that you created, that you spent money and time to produce. So why are you going around and trying to remove people from sharing it? You created a promotional video and now you want to remove people from sharing it? That's not normal. Most companies like Disney that created trailers, I can share the trailer of The Mandalorian and they're not going to copyright strike me for that because they want people to see it. Same with an Apple commercial for one of their products. I can put that on my channel. They're not going to copyright strike it because they want me to spread it. So if you created the Nikola One in Motion video, why are you so concerned about people now seeing it? The next question I want to ask Nikola is, are you familiar with the Streisand effect, the social phenomenon that occurs when an attempt to hide, remove, or censor information has the unintended consequences of further publicizing that information? This is when Barbra Streisand got really upset that some photographers took pictures of her home. That's what she did. She got really upset. She tried to sue them. And what it did was made the whole thing a national story. So instead of just a couple people having pictures of her home, now it was a national story where the entire nation saw her home. This Streisand effect has been proven over and over again. That's the easiest rule in the game. I don't give a second's notice to critics of mine. There's been people that have posted videos bashing me. I'm not going to go and highlight them because I know it will draw more attention to them. So that's the second question I have for you and your social media manager. Are they aware of the Streisand effect? And then the last question I have for you, Nikola, is do you actually plan on just running a normal company and building vehicles? Or are you going to spend your time targeting YouTubers, having it blow up in your face when you do? Is there any plans in the future to actually just build vehicles and try to sell them? To actually have a real company that makes a profit? Right now, it doesn't seem like you're focused on that. So that's just a couple things on my mind. A few things to consider, Nikola, while you're busy going after YouTubers. Okay, moving on, let's get to emails and questions. If you'd like to leave a question for the show, just leave a comment in this video. You can do that, or you can write me at joseph@josephcarlsonshow.com, but I'll be responding to both. So comments on each video as well as emails. The first one is from Alex G. Alex says, I get the whole SaaS model that every company loves. Recurring revenue is awesome. I'd probably want it if I were a business, but as a consumer, I absolutely hate subscriptions. I don't want to have to subscribe to more things. Well, Alex, you're definitely not alone in this. A lot of people have like subscription service fatigue. They don't want to keep adding on more monthly subscriptions. I think there's a time and place for subscription services, and the businesses that are really good are not just ones that have a subscription model. It's where they have a subscription model that matches their business. For instance, look at Netflix and try to imagine that not being a subscription service. You would have to pay for maybe every different show on their service a different amount. It'd be just a big catalog of shows, and all of them would have a price. To watch this movie once would be like $1 or 30 cents. And you have to make a transaction every time you want to binge watch something. That would be atrocious. That's like moving back to where you have online rentals and you have to pay for everything over and over again. That's just not an enjoyable user experience. Netflix creates new content every single month, and so a subscription service fits really well with that business. Businesses that are content creation, where you're coming up with something new and different every month, really fits well with a subscription service. There's some businesses that really don't fit well with a subscription model, but they try to shoehorn a subscription model into the business because they know it's a superior business model. They might do this with products where they come out with the product once and you subscribe to it, and they don't change the product at all. It just stays the same. So you're basically paying a subscription to keep the same thing over and over again. That's how I feel when I pay property taxes. I buy my home, I buy the property, and then the government has kind of a subscription where I just pay every year to live on the thing that I already paid for. I would love to just pay for it once and not have to pay the government taxes every year on my property. But that's how some things are. So I think subscriptions fit with things where it's changing and evolving every single month or however frequent the subscription is. If they're doing new work and they're creating new content or they're adding new developments to the thing that they're doing, that makes sense. But there's a lot of businesses that are saying, I want monthly revenue, even though I'm selling a product one time, and they're just paying over and over again for the same thing. In those cases, I do not think it's a good thing. Stas says, Joseph, why did you sell out of LTC? It is a reliable monthly dividend income. I did sell out of LTC. I put that money into Store Capital and Realty Income Corp because looking at LTC, there was a couple concerns I had. One of them is that it is a healthcare REIT, which I already have exposure to through Welltower. So I already have one of them. LTC was smaller. It has a smaller market cap. It's not as diversified with its tenants. So it only has a few tenants it rents to, and that just causes me concern. It's a small company, not really well diversified. I think that makes it a little bit more risky. And then I've read about healthcare REITs a lot over the past 6 months, and there's a lot of talk about how they're going to face continued trouble over the upcoming years. Basically, there is a lot of people becoming elderly and moving into them, but coronavirus has kind of reversed that where people don't want to, and they built a lot of these buildings. They overestimated how many people were going to move into these nursing homes, and so they built a lot of them, and they're having a hard time filling all of them. So with that kind of sentiment looking forward, I thought I would just better put my money into Store Capital, which I have a higher conviction with. So that's the reason I did it. I like Store Capital's business model more. I think it has a brighter future. So I sold out of LTC, which I don't think is a bad holding, and I put it into a company, which I think just has a better future outlook. This one's from Peter. He says, Joseph, I hope this gets to you on time to make the show. It did get to me on time. He says, I was curious on your take regarding the governor of California announcing a ban on gas-powered cars before 2035 and how it could impact positions in the oil stocks. Thanks. Keep up the good work. That's not a concern to me because I don't own any oil stocks. I sold out of them. The companies that I owned were Chevron and ExxonMobil. There's very clear evidence that ExxonMobil especially is doing nothing to move into renewable energy. Wall Street Journal just did a recent a recent show on this where they explained that ExxonMobil doubled down on oil and has no new efforts to move into renewables. If you want to look for oil companies that are moving into renewables and doing investments in that, most of them are European companies like Shell and BP. So I sold out of ExxonMobil and Chevron. I got a lot of people criticizing me for that. The companies that I purchased with those sales have gone up, and those two positions are down over 20% right now since I sold. So it's worked out to be a good decision so far. So I no longer have any oil stocks, so this really doesn't impact my positions in oil. But if you do own oil stocks, I will say, I don't think that this is big news. California announcing a ban on gas-powered cars by 2035? It's in 15 years. I bet every car will be at least 90% electric driven by then. I think almost all of them will be electric by then without any type of bans. Right now, we have companies like Toyota that are basically making everything at least hybrid. So they're halfway there. At least most of their cars new are going to be hybrid. So companies are trying to move this direction already, and I think at a much faster pace than 2035. So the governor of California, he's going to announce this ban. Electric cars are already moving that direction, and then he's going to take credit for pushing them along the right direction because of this ban that he announced. You say, they knew that this day was coming, so they moved along faster than expected. I don't think that this ban has any effect on it. I think that cars will be electric powered by that time anyway. And as far as my outlook on oil stocks, obviously, I'm pretty negative on it. I don't think that they'll necessarily keep going down in value. Maybe you could make some money if oil demand goes back up and the price of these oil companies have a temporary bump. But I'm just looking overall. Overall, in the future, we're moving away from these companies, and investors are rewarding future-driven companies. Investors look to the future. They're not looking to oil. That's my opinion on it. I think that it's not the place to be. Okay, well, that's going to be all for this episode. I appreciate everybody for tuning in. If you could throw me a thumbs up and subscribe to the channel if you haven't, I would appreciate that. Apparently, it helps out the mythical YouTube algorithm. So I appreciate everybody that does that, and I'll talk to you guys in the next episode.